Now, what is a credit score and why is it important? A credit score is a number that represents the credit worthiness of a person. That is, how likely you are to pay your debts. Credit worthiness literally means worthy of credit. It's actually a number that helps lenders assess how risky it is to lend you money. A low credit score means you're high risk, so banks, insurance companies, and lenders charge you higher interest rates. The most common scoring model was created by Fair Isaac Company. Hence, it's also known as your FICO score. A credit score can range anywhere between 300 and 850. Banks, credit card issuers, insurance companies, etc. all use your credit score to determine who qualifies for a loan and at what rate. Again, the lower your credit score, the higher risk you are. So banks, insurance companies, and lenders actually get to charge you higher rates. Here are some interesting things about your credit score. You have a total of 3 FICO scores, one for each credit reporting agency: Experian, Equifax, and TransUnion. Those, by the way, are the 3 major credit card reporting agencies. The higher your credit score, the better. That is, the more credit worthy you are. Your credit score can be influenced in either a positive or negative way by late or timely payments, any judgments on your record, liens or bankruptcies, your credit history, different kinds of loans, and other factors. You can actually help manipulate your credit score and actually improve it. And I'm going to show you exactly how to do that. Here's how to improve your credit score super fast. Tactic number 1 is called the please verify. First things first, get your current credit scores. Remember, there are 3 of them. And in a little while, I'll show you how to do that quickly and easily right here online. Next, get your credit reports from all 3 agencies: Experian, TransUnion, and Equifax. Now, with the resource I give you, you'll also be able to get your 3 credit reports from all 3 credit agencies in addition to all 3 of your credit scores. Now, when you get your reports, circle anything inaccurate or questionable on it in red ink, up to about 3 items in all. You can also include any inquiries you haven't initiated or authorized. Just remember that the information you point out has to be inaccurate, or at the very least questionable. But try not to do more than 3 in all, as the process will take longer to complete. Next, write a simple handwritten letter and mail it to each agency and ask them to please verify the information you've circled. Now here's the deal with this. The Fair Credit Reporting Act requires the credit reporting agencies by law to verify any information you dispute. They have to check to see if the information is actually true. The burden is on them, not you. And any information that cannot be verified must be removed. Also, a simple handwritten letter won't easily be lost amongst the piles of forms the agencies receive on a daily basis. So be sure to use this tactic right away. Now, with this tactic, results will take about 30 days or maybe a bit longer, depending on the number of items being investigated. Here's advanced tactic number 2. I call it the money shuffle, and it can actually work a bit faster than tactic number 1. Here are some interesting facts. A whopping 30% of your credit score is based on the amount you owe in comparison to how much credit you actually have. Using more than 30% of your total credit actually lowers your credit score. This is called your utilization ratio. For example, if you have $1,000 in total credit and you use $350 of that $1,000, then your utilization ratio comes out to 35%. A ratio of 35% actually hurts your credit and can lower your credit score. The money shuffle tactic helps bump your credit score by doing one or both of the following. A. Shuffling your credit card balances around so they all show below 30% utilization ratio. Or B. Raising your credit limit on cards so that your utilization ratio falls below 30%. With the money shuffle tactic, you're just moving money around, or you're having more money added to your total credit. And accomplishing this is quite simple. Just call your credit card company and tell them you want to do a balance transfer, or simply ask for an increase in your credit limit. With this tactic, you'll be able to see results in about 30 days or less. Here's tactic number 3. It's called rapid rescoring. Now, rapid rescoring is the process of having your account information quickly updated at a credit reporting agency. Rapid rescoring can only be done by companies that have a special relationship with the agencies. Typically, these are mortgage lenders or brokers. The cost to rapid rescore your account costs about $25 to $50 for each item they fix per agency. Thus, if you have 3 items that need to be fixed, the cost will run you about $75 to $150. Do keep in mind that evidence may be required to start the process of rescoring your account. Now, rapid rescoring isn't for everyone, but it may be a good idea for you to rescore your account about 1.5 to 2 weeks before applying for credit or a major loan. Now, if you have a low FICO score and you're about to apply for a mortgage, then you're an excellent candidate for rapid rescoring your account. Now, the great thing about this particular tactic is that you can get results in as fast as 7 days. Yes, folks, rapid rescoring works that fast. Here's the wrap up. Your credit score is extremely important because banks, credit card issuers, insurance companies, etc. use it to determine if you qualify for a loan and what rate to charge you. You have a credit score for each credit reporting agency, 3 in all. Your score ranges from 300 to 850. The higher your credit score, the better. Lastly, you can actually help improve your credit scores by following the 3 tactics I've outlined in this video.